Welcome to this channel. This is my first video. So this is going to be a day trading channel. I have another YouTube channel called Jacob Robinson, where I do like vlogs and bouldering, like rock climbing videos and like gym stuff as well. If you want to check that out, I'll put the link in the description. That's my other channel, but this channel is going to be mainly trading orientated. Okay, so getting into it. What are you going to see on this channel? I'm going to be trading a 50K Topstep Combine. I literally just bought one. So as you can see here, this Topstep trading combine right here, I've just purchased just then. It's currently Sunday, so the market's closed right now. But going into next week and into the future, this YouTube series is going to be based around me trading this exact Topstep Combine and showcasing how I trade. I'm going to be showing everything. So I'm going to be outlining what strategy I'm going to be using to trade, how I'm going to be trading, when I'm going to be trading, what I'm going to be looking for, rules and everything like that I'm going to be using to trade this combine, right? Obviously the goal is to pass it. So you'll see all of that. You'll see losses, you'll see wins, you'll see break-evens, whatever happens, I'm going to put everything on this channel. So you're going to see everything that's going to happen with this account, right? I don't know if I'm going to live stream while I'm training or anything like that. I don't know yet. If you think I should do that, definitely drop a comment. Maybe I can start doing that if you'd like to see that. But mainly just going to be doing my ideas of the trade that I want to take during the week. And then after, I'll showcase the trade I took, if I took one, why I entered, where I put my stop loss. I'm going to show executions. I'm going to be trading on Topstep X, which is Topstep's own trading platform. So I'm going to put on the execution so you can see exactly what I did. Yeah, it's going to be super in depth and it's going to be interesting. I think it's going to be quite entertaining and very interesting for someone who is a trader yourself, or maybe you just want to see what it's like, maybe interested in it but you've never tried it before. This is going to be like super raw, super in-depth kind of look into what trading is, essentially, for me at least. Obviously not everyone trades the same, but yeah, let's just hop straight into the rules and stuff of the account, so you can get an idea of what kind of trades I'm going to be doing on this account. Let's get it. Alrighty guys, so I've just written out all the rules and stuff that we're going to quickly go over so you can see my idea for how I'm going to be trading this account. So obviously we've just bought a 50K Combine, so the rules of that account are, for me to pass, I need to make $3,000, and if I ever lose $2,000 or more, then the Combine is blown, right? Like the account's failed if you get to $2,000. And also, as you make money, the $2,000 trails behind you. So let's say I start at $0 balance, I take a trade and make $1,000. Now that max drawdown has moved from where it was at when I started the account at 48K. It's moved up by $1,000 to now 49K, and it stays there. So if I was to lose $2,000 after making $1,000, then that would also count as account blown, because it trails as a trailing end of day trailing drawdown. So let's go with this quickly, right? So my strategy, this is how I'm going to be trading. So you're going to see my executions will be exactly according to this here. So looking back at my executions, where I bought, where I sold, it will be exactly because of this. Okay, so I will be buying or selling, right? Because it's futures, we can trade up and down with a buy side or sell side liquidity draw in mind, with a stop loss at the previous swing low or swing high, depending if I'm buying or selling, before the FVG get formed. Okay, so when we look at the very first trade that I show you, which I haven't taken yet, obviously I just bought the account, I haven't taken any trades, but I can tell you right now, the first trade I show you, whether it's going to be this week or next week or whenever the hell is that I make the next trade, there's going to be a FVG gap. I'm going to either have bought or sold inside that FVG gap. The previous swing high, swing low before that FVG gap is where my stop loss will be. So if it was a loss, you'll see I've got stopped out at the previous swing high, swing low, or you'll see a buy side or sell side liquidity draw, and you'll see take profit was taken there at that liquidity draw. Or the only other thing that could happen is if it enters me and then goes sideways forever, and then the end of the day comes and Topstep Combine you cannot hold overnight, so they kick you out at the end of the day at 4 p.m. New York Eastern Standard Time. They'll kick you out of the trade. So if by somehow I get entered and it goes sideways for the rest of the day, doesn't hit my stop loss or my take profit, and then the end of the day comes, you'll see I got kicked out of the trade randomly, and it will either be a small win or a small loss or break even, something like that, right? That's literally the only executions you'll see. Leverage rules. I will be trading gold only and only micros. I will look to risk as close as possible to $250 per trade. You can't choose exactly $250 every trade because you're buying contracts, right? So one gold micro contract is $1 per tick in gold. So it means I have 250 ticks to draw down. If I bought one micro, then I would buy one micro. If my stop loss had to be 250 ticks away from when I was entering, I would buy one micro because that'd be $250 risk. However, it's not always going to be like that. It's going to be maybe sometimes it's going to be like 100 ticks away, right? So I would buy like 2 micros or sell 2 micros depending on if I was buying or selling. And then that risk would be close-ish to 250. It might be a bit less, might be a bit more, but as close as possible to 250 pretty much is what my leverage rules for every trade. Every trade exactly the same, never higher, never lower, just straight up 250 every trade. So for me to fairly count, I would have to take 8 losing trades in a row. So starting at $2,000, if I take a loss, 250, okay, my balance is $1,750 now. Another loss, okay, my balance is $1,500 now. 8 trades later, I would hit the $2,000 max drawdown and the account would be forfeit. So I'd have to take 8 losing trades in a row to lose the account. Now these is like not exact rules, absolute rules, but this is like guidelines kind of for me. So I'll look to take around 1 trade per week. The trade idea will be based primarily on a weekly and or daily drawn liquidity or bias. Okay, so if I'm long and I have a daily bias, then I'll take a long trade maybe during the day if a setup forms that I like for value gap. That's going to be what I'm going to have using that high time frame bias in all my trades, every trade. I will only take trades with a 2-1 risk reward to risk ratio or higher. So if it's less than 2-1, then I won't take that trade. Okay, so this way I'm ensuring that for every trade I take, I'm at least giving myself the chance to be profitable, right? Because I can take 2 losses and 1 win and still be at break even with this risk reward trade. So with this risk reward ratio, so this is giving me a slightly better chance to be profitable by having this rule essentially. I'll use the 4-hour and 1-hour order flow, so looking for value gaps, reading the order flow on the 4-hour and the 1-hour, dealing ranges, OT, all that good stuff, market maker buy model, market maker sell model. I'll be reading that 4-hour, 1-hour order flow and looking for where is most likely a low resistance liquidity run is going to unfold and where I should take my trade. Obviously aligned with the daily drawn liquidity or weekly bias or whatever. I'll look to enter in as a lower time frame as possible to get the highest risk reward, but I'm not by no means going to be forcing myself to go down to the 1 minute and buy 1 minute for value or sell. I've been there before and it just results in a lot of losses because it's a low time frame. It can do a lot of things and still respect like a 5 minute or a 15 minute for value gap, but maybe like the 1 minute for value gap we were looking at would have got stopped out. So I'm just not going to try and go too low, but I'm still going to try and find like obviously high risk reward trades. So like ideally, like 5-1, 6-1, something like that it's pretty good, right? Once this is an absolute rule, okay, absolute rule. Once I get into a trade, I cannot close it. Once I get into a trade, I cannot close it. I can't go, oh, it's looking bad and close it. That's not happening. I know from experience that this causes me to be unprofitable when I get scared about a trade, going to my stop loss, close it. And then so many times I've done that and then it's still run to my take profit. So I'm just absolutely not going to be able to do that at all. Once I enter a trade, it has to go to my stop loss and stop me out, or go to my take profit and close my position, or like I was saying before, the market closes and then Topstep kicks me out of the position. That's the only way trades can be closed after I've entered. So this also helps me to be very selective with my trades and make sure that this is really a good trade before I enter, because I know that I can't leave it just randomly. Over trading rules, finally, if I take a trade, it's a loss. I'll only allow myself one more chance to take another trade that day. If I take 2 losses during the same day, then I'll stop trading for the day. So that's a good rule. So I can't try again and again and again in the same day and blow my account in the same day. This is absolute. I will never take a trade on a day if we got CPI, FOMC, or NFP on a day. Like CPI is usually on a Wednesday or a Tuesday, whatever. If we've got CPI coming up, I will not trade before that event, only after. If there's CPI, FOMC, or NFP, then I'll only trade after these things, never before on that day. During the week, let's say we got CPI on like a Wednesday, right? I can trade on a Tuesday or Monday before, but primarily I'm going to look to take because I'm looking to take like 1 trade a week basically, right? So primarily I'm going to be looking to only take a trade after this event has happened, right? So on an NFP, obviously not, because it's on Friday. So if I want to trade NFP week, then I'm probably going to be trading Monday or Tuesday. FOMC is usually on a Wednesday. Ideally, I will look to trade after FOMC on that Wednesday afternoon, or Thursday or Friday, right? CPI is usually on like a Tuesday or Wednesday. Like I can trade before, but I really want to try and like not to do that. You know, like if I really think something's high probability, I can trade before, like on another day before, not on the same day, but on another day before that event. But primarily I'm going to look to trade after these events, because these events can be often used as due to swing. So if I'm trading in one direction on a weekly chart and I want to wait for this, usually I'm putting myself in higher probability if I'm waiting to trade in that week to capture that weekly movement. After due to swings happen, you don't want to be doing before, because the movement likely won't unfold if there's been no due to swing. So good stuff. Let's go now quickly and have a look at this account real quickly. Let me just fix this up. The process that I'm going through to make trades and to make these executions is going to be it's a very specific process, and it can't be different, and it has to be the same thing every time, and I can't be just changing things up. Okay, so I'm just going to try and be consistent and really stick to this process for every trade the exact same way. But at the same time, emotionally, I don't care what happens. I'm just going to do, it's going to be boring. It's just this. I did this execution. Okay, it worked out. I didn't. Okay, I did this execution. It worked out. I didn't. Doesn't matter. They're just the same thing every time, and not giving a shit what happens. I don't give a shit. If I end up passing this account, great. I'll look to continue trading it the same way. I don't give a shit. I don't care what happens. But also sticking to the rules, you know? So, yeah. Not caring about it too much. When you care about something too much in life, you always fuck it up. It's always the way. So if I just don't give a shit, then should be smooth sailing. Let's have a look at this. So you can see here, 50K buying power, Topstep X, balance 50K, created on the 7th of September. That's today. Yep. And you can see I haven't traded it yet. Nothing here, no information. So there you go, you can see it there. Everything, start date, end date, blah blah blah. Haven't traded yet, no trades taken. Maximum loss limit, there's there. Best days below 50, obviously that should be fine, unless I get an insane 1 to 20 to 1 risk reward trade, risking $250 in my first trade. Anyway, I'm rambling now, so obviously you can see everything. It's gonna be super. I'm gonna be super open and just display everything with this account. I'm not gonna be hiding nothing. You'll get to see everything fully in depth. So going straight into next week, because today's Sunday. So right now I'm gonna do my weekly outlook for next week, because guess what? I may take a trade next week with this account. So let's do our weekly outlook right now. Okay. Okay, so I'm going to try and be quick here. I feel like I tend to like to take a bit of time on this, but no, I'm just going to be quick, okay? We're going to be quick. So, okay. Look at the weekly chart. Here we are, weekly chart. What have we recently done? Recently, we were trading inside this range here. I'm going to highlight this using equilibrium level. So you can see recently we formed this swing low and this weekly swing high. So this is trading range, and we stayed inside that for many weeks. You can see many weeks we were inside this range. Now, very recently, and by recently I mean just this week, we finally broke into the upside, which I was expecting and was anticipating. And this is what I was waiting to happen to actually start doing this whole series. Because I like trading gold, and I was waiting for gold to get out of this range to the upside because I'm bullish on gold, right? And it's just done that last week. So great. That's been met. So now I'm looking to trade gold again. So we've just left this range, okay? I don't anticipate gold coming below these lows anymore. I would say for now, this can change and I can be wrong. Don't take any trades based off what I'm saying. This is all for me trading this account. This is just me giving my ideas and my this is, you're going to see these starting like here and going through this stuff is what leads me to taking actual trades that can actually one day maybe make me money. But there's a long process involved there. I do not anticipate gold taking out these lows, okay? Specifically this low, okay? This low right here. Let's put a line on it here. Okay, so this low, this swing low, this weekly swing low, I do not want to see gold take out this weekly swing low. What would that mean if it did? Okay, I'm not saying it's going to. I'm saying I don't want to see it happen, okay? If I want to be bullish and if I want to take long trades, then I'm going to assume that because of the order flow, gold shouldn't take out this low and then still go higher, okay, on the weekly chart. If it takes out this low sometime in the future, then I would look for a ranging environment or maybe even lower prices. That's what I don't think is going to happen, okay? I think we're going to go higher in gold. We're going to see up-close weekly candles going higher and higher and higher here. And I don't think this low is going to be taken out, okay? In fact, if it took out that low, it would pretty much prove that idea of high prices. It would pretty much prove that idea of high prices wrong. I wouldn't want to look... We'd reassess when it comes to that, right? But as for right now, I don't want to see this low taken out, okay? So, obviously I'm looking at PD arrays. Inside of this range here, we have a weekly for value gap. Okay, so I'm just going to highlight this weekly for value gap. Yep, weekly for value gap, okay? Note this for value gap. It could be important, maybe. That's really all we have on this range, okay? So you can see we trade inside this range for a long time, and then we eventually broke out to the upside of the range. I do anticipate higher prices still, okay? So I'm looking for something like this. High prices, okay? High prices is we're bullish on gold, okay? We want to see high prices, and then we have a weekly for value as well. Going down to the daily, which is all I'm going to be going down to for now, okay? You can see, so going down to the daily, we can see a little bit more information, okay? We can see each daily up close candle. We can see we repriced here into this daily for value gap. And then we went higher, there's a volume balance in here and here. Went higher, we left a bunch of daily for value gaps open like this one. This one we traded into, and we used the volume imbalance. Okay. So you can see we traded recently in the last week. We had Monday, which there's no Monday, so I guess it was a short day or a bank holiday or something. I don't care. But we can see we have Monday, Tuesday in one daily candle here. Wednesday went higher again, closing and creating this daily for value gap. Thursday we traded down into that. We very shallow delivery into that daily for value gap. Very shallow. You can see we respected this daily volume imbalance. which is the very upper portion of that daily fair value gap. We respected that, and then immediately the next day we traded higher, and we traded through this daily swing high, and we created a new all-time high for gold on Friday last week. Okay, see that there. Great. So that's the current order flow. Okay, we displaced the upside on the daily and the weekly. We traded down very shallowly into that daily fair value gap and daily volume balance in the second half of last week, and then on Friday we opened above the daily volume balance, traded down, touch it one more time, and then expanded the upside and closed the week at gold all-time highs. Great. That's the current order flow we're in on the daily chart. I'm not going to bother going lower than the daily chart for now. For my weekly look, that's all I need to do. So we're just sticking to the weekly and daily. Okay, so what potentially could we anticipate happening next week? Do I have a bias or a drawn liquidity for next week's candle? It's tricky, a little bit tricky, because I am bullish, okay, and I would ideally like to see another up close candle in gold next week, okay? However, we do have this weekly fair value gap as well. And this weekly fair value gap, listen carefully, I'm not saying it's going to trade down to this next week. This weekly fair value gap could become a drawn liquidity at some point in the future. It could be next week. It could be the next week. It could be next month. It could be the next month. I don't know when currently. But at some point in the future, I'm not even saying it's going to. It could leave it open and keep trading higher. But at some point in the future, it could become a weekly drawn liquidity. A drawn liquidity in general, okay? Am I anticipating next week to open and trade down into that immediately? No. No. I never said that. I'm not anticipating that. I would rather see the weekly candle just trade higher next week. Okay? So that's my bias. I have a weekly bullish bias next week. Weekly bullish bias, okay? So obviously, most likely I'm maybe going to look for a long trade next week, okay? There you go. You've got there we are. Actually, always forgot, we have to look at the news events. So boom, jumping over to Forex Factory. We've got no news Monday, no news Tuesday. We have PPI, red folder news on Wednesday, and then we have CPI, which is one of the big three news events, on Thursday, and then we have some more red folder news on Friday. So looking at this week, we have a soft weekly bullish bias. No specific drawn liquidity upside though, other than just last week's high. We have no news Monday or Tuesday. Then we have all the news packed in the second half of the week on Wednesday, Thursday, and Friday. And Thursday we have CPI, which is one of the big three. What did I say in my rules? I said, ideally, if we have CPI in a week, I want to look to trade after that than before. Not always, not 100%, don't have to do that. But primarily I would like to prefer to do that because I'm putting myself in high probability scenario when I do that. Okay? Also, we have no news Monday and Tuesday, okay? Literally none. No news. No impact. There might be low impact. I haven't ticked that. I don't care about low impact. Orange and red folder news only. So medium and large impact news only. We have no news Monday and Tuesday, okay? So immediately looking at this chart, combined with that news event schedule, I'm going to say right now I'm probably not going to trade Monday or Tuesday. Most likely. Most likely I want to see what happens Monday and Tuesday. Do we continue to just trade higher here? Do we go sideways? Do we start to trade lower below this daily swing low here? This intermediate daily swing low? I want to see what happens on Monday, Tuesday, okay? I think most likely it'll go higher, but I'd rather wait for either Wednesday, maybe, because there's some red folder news on Wednesday. We got some 8:30 a.m. beginning New York AM session PPI, okay? There could be something there. But ideally, honestly, super ideally, I want to trade on Thursday after CPI, so from like 9 o'clock, 9:30 onwards, or anytime Friday, like London or New York AM or lunch or PM session. Probably not that late, but yeah. Ideally, if I had to take one trade this week with the current information I have, it would be sometime during that time, okay? It's either going to be on Thursday or Friday, this one trade, ideally. And it's going to be after 8:30 a.m. on Thursday, New York time, New York Standard Time. So like 9 a.m. onwards, kind of. Or on Friday, okay? So that's my idea going in for next week, okay, guys? So thank you so much for watching. I will make sure to annotate everything, take screenshots of any trades I took, and I will see you guys next weekend.